Hello traders, and welcome to another technical analysis video brought to you by Orbex.com. You're now surfing the waves with Richard. Now what I want to do today is I'd like to follow up on some of my previously posted articles, and basically this one, the NFP um, the NFP live webinar, which was basically hosted on the 6th of July here by yours truly, and in which the analysis pointed out towards a possible bearish outcome for the US dollar, and it actually happened. So basically, the people active there live were, they knew it was a possibility, a valid possibility. So that's basically it for the NFP live webinar. Now, since then, some things actually unfolded. So what I'm gonna do is, let's say for instance, this article was posted on 29th of June on the let's say for instance with some views, this view is on the dollar index basically right then heading up and then possibly starting a bearish leg, for the for gold right here in this zone between let's say to 1250 and 1240 to expect some sort of a bullish reaction. I'm gonna update all my charts today with you guys and also leave you guys with something. And the reason why I'm doing this video today is because the market is pretty much located at a crucial point, a juncture. So in other words, something big might happen, and I'm gonna explain to you further on what exactly I am seeing. Let me just continue with the Euro USD here when around 1.155 uh, it started developing some sort of a bullish pattern, and I'm gonna obviously follow up, right? As for the USD yen, I was expecting basically this consolidation to finalize. However, this correction created a new high point, and I'm gonna go on it so that you guys can actually see. But the point is that the star of the day is the Nasdaq, right? And this chart, I mean, back then, I was actually expecting Nasdaq to possibly continue, yeah, towards 7320, something like that, and then obviously this arrow, right? Now, obviously this didn't happen, right? But what if it will? So now, going back on one of my, the latest article posted is this one, Trade War Sentiment Volatility Spike Technical Analysis, right? Posted on July 12th. And what I'm talking about here is the possibility of VIX, the volatility index, possibly starting another spike like the one it did in early February, right here. Yeah, when Dow Jones, S&P 500, Nasdaq, and pretty much all global indices lost considerable ground. The bearish leg was actually quite big. So S&P 500 right here on this 4-hour chart, I was expecting basically a consolidation and more upside towards 2825, yeah, and then look for bearish signs for this pattern to be basically ending, possibly ending at around 100% of W and X, right? Next, Dow Jones, pretty much there's something happening. There's a divergence happening with between U.S. indices, and I'm going to explain to you exactly what I'm seeing. So Dow Jones, I was still basically bullish, but the point is that it can actually drop without hitting the 100%. That's what I'm going to explain to you why later on. And Nasdaq, right? Right there, following up, basically, I said that it could basically continue further on the upside right there. Now, back to let's go on the charts, yeah, with the VIX first, the volatility index, pretty much, guys, you guys can actually see. Now, since the time the quarterly report was released for you, um, let me just zoom in right here, yeah, this was somewhere around June 12th. It did started the first spike, and now it seems to me like it could be um, it could be spiking. It could actually start. So if indeed, let's say for instance, we have an A right here, and this to be a B wave. Yeah, because you can do this on any chart. As long as it's a chart, you can do a lit wave analysis on everything. So this basically to be the one for the C. Yeah, so 1, there's the 2, and then 3, 4, 5. Yeah, but this would be quite big right here. So this spike could could mean business. In other words, indices could be dropping again. This is basically the reason for of this video. Now, going on indices, first I'm gonna basically start with the DAX, Germany 30, DAX 30 on the 2-hour chart. The way I'm labeling this chart is basically in a WX and then AB 1, 2, 3, 4, 5. We'll see if the 3 actually starts, because if the VIX would, or if the VIX would spike, then um, this could this drop could actually occur. Yeah, so that's basically it. Now, let's say for instance this this top was actually spotted with one of my previous views back then around 13,200. Yeah, and we can actually see. I'm just loading the new bars from the time of the actual post. Yeah, so we can actually arrive in real time right here. Now, what's happening? It's is quite interesting, right? Because this pretty much looks like a correction. Some would call it a bear flag right here. And if, of course, this breaks, and it looks like it's really doing that, possibly doing that now, yeah, this could actually do something like this, right? So if the VIX would spike, then it could be serious. So this is basically for DAX. Now, Dow Jones, there's something happening here. Um, we have a triangle. The triangle usually signals the end of a pattern, right? In this case, this pattern right here. So this could be ending very, very soon. Yeah, not sure, not sure exactly when, but I can anticipate it. Yeah, I can actually, let's say for instance, all right, now, just give me 1 second. Okay, all right. So the way I'm labeling Dow Jones on the 4-hour chart is obviously in the beginning of February we had the bearish leg right there. Okay, that's the first leg of the entire correction. Now, since then, it started consolidating, making a mess, right? Sideways movements. So the point is that, let's say for instance, since then created a higher low, an even higher low, an even higher low. So we can actually notice that it's somewhat um, showing signs of weakness. Yeah. So the way I'm labeling it is as a WX and then a complex corrective structure, triple free WXYXZ in a worst case scenario in which this could form an ending diagonal right here in the channel. Hence the reason why I'm drawing that channel right there. Yeah. So to label this A and then the triangle in B and then an extension in a 1, 2, 3, 4, 5, right? If that would even happen. However, the structure can actually be like this: W, X, A, B, C, D, E, right? So we could have a triangle in the Y. So we have W, X, Y for the B, and this could go, right? So this could be the 1, this could be the 2, and the 3 is already in place. Now, this is an alternate count, but what I do know is that this trend line right here, if a breach would occur, then this would be in the menu. Yeah. Um, Now, however, it can bounce from it, deliver that last leg on the upside. I would be satisfied, to be honest with you, to hit the 100%. However, it doesn't have to, right? Due to the alternate count. But a clearer picture, slightly clearer picture, would be on the S&P 500. So my next chart is S&P 500 on the 4-hour chart as well. It's slightly higher. So the structure is kind of the same, WX, and then a rising channel in a triple free. Yeah, so again W X Y X and then the Z wave formed out of ABC, right? So the 100% is right there, and the level is 2825. So the 100% is W and X minor, this purple, minor WX, and 100% is right there, Fibonacci extensions, in order to project the Y and the termination of B, right? So we could have A, B, and then C. So that's basically the overall structure that I have here. So again, we have this triangle right here on the S&P 500 as well, and the ending diagonal is looking better, I would say, right here with this purple lines. Now, what I would expect is either a rise and meet the fibs, so basically to hit this vibration zone, vibration level, points of interest, where it started dropping, yeah, and to possibly complete the pattern. Now, it would complete the pattern as long as it would go higher than the previous high point. So the higher high, higher low. Yeah. So it created a higher low, then it created a lower high, and then created an even higher one, right? But this one is higher than this one. So the pattern can be considered as complete at this stages, right? Because this point didn't go lower than this point. So this point must go higher than this point, even by a tick. Doesn't matter, right? So what I'm seeing is S&P 500 becoming vulnerable. But the star of the day and the main attraction is not S&P 500 or Dow Jones. I believe that the VIX possible spike has something to do with Nasdaq. Nasdaq 100, right? Still on the 4-hour chart. And we can notice that the structure is entirely different, completely different. Because, let's say for instance, back then in February when it started falling, yeah, the way I'm labeling this entire corrective structure is in a running flat WXY for this intermediate W purple, and then the X developing in a rising channel, creating all-time highs. So basically, Nasdaq is creating new all-time high, new all-time high, new all-time high, while S&P 500 is creating basically before, let's say this is the top, yeah, lower high, lower high, higher low, and Dow Jones from the top, higher low, higher low, higher low. Hence the reason why I think there's a divergence going on between the US indices, and Nasdaq could be the one which is dragging everything with it, right? So moving on, WX, YX, Z. The reason why I'm labeling this, and I know, let's say I recently even received a question, you can call it a critic, but I don't mind at all. Why I'm labeling multiples within multiples. Well, let me just make it short and simple, right? This is the main trend, the dominant trend. It's a parabolic move which came down from way low, right? This is the first leg. This is correction, which is correcting this leg. This correction is correcting this leg. This correction is correcting this leg. There's a conflict of corrections. There's a conflict of degrees. Hence the reason why these complex patterns appear, right? So that's basically the explanation. That's why double and triple freeze form, because it's a conflict of corrections and conflict of degrees simultaneously. That's why WXYs occur. In this case, WXYXZ. I could be labeling this, yeah, some other way as an A, B, and then C in an ending diagonal. But structure is not that one, in my personal opinion. So how I'm seeing this Nasdaq unfolding, yeah, in my personal opinion, of course. And again, this is not an investment advice. This video is to be treated, and all my views actually are to be treated as simple market commentary. Now, what I'm seeing is, let's say for instance, an ending diagonal, yeah, because we have the A, we have the B. What I would expect is obviously this being the 1, 2, 3, 4, and one more push to meet this 61.8 of these two swings, yeah, but also to meet some other Fibonacci extensions. So far, to be honest with you, they have been met, yeah. All of these, let's say for instance, all of these have been met, all of these have been met. So the main, I mean the vibration zone is here, yeah. Whatever is on top is just basically the divergence, and we can actually see the divergence right there, the bearish divergence. So what could happen? Well, there are two scenarios to this, right? Either Nasdaq, sorry, something's happening right here. Okay, there we go. So either Nasdaq will deliver one more up for us to have a proper ending diagonal, yeah, with an overshoot, of course, and the levels would be somewhere around 7,500. Anyway, between 7,500 and 7,700, those are basically the next fibs. Hence the reason why I put the 7,550 as the actual resistance level. So either it goes up and creates, basically delivers an ending diagonal, or it breaks this channel and the pattern will not be that one anymore, because it created a new all-time high and it met all the rules. It can actually drop if it wants, anytime it wants actually, right? And US 30 could agree with that, and also the SPX, right? So that's basically for the US indices and also for the DAX, right? So far the indices actually agree. Now what I've noticed is that the dollar, when the VIX spikes, and this happened 3 times in a row already, what I've noticed is that the dollar stays frozen, doesn't move, right? Doesn't go up, doesn't go down, or remains slightly bullish, or right after the spike becomes bullish, in the sense that it is actually, let's say for instance, at this risk off in this during this risk off period, because this is a risk off period, many things are happening fundamentally. Um, the dollar actually stays put, stays frozen. So right after the VIX spikes, it gains strength, which would agree with my next views on the forex, metals, and yeah, and commodities. So basically, let's say what I would be looking for when it comes to indices is a possible spike in volatility, and this in translation a big move on the downside, right? So that's pretty much it. So watch out for that. Pretty sure that if you guys are following me correctly, you know what I'm talking about. So um, let's say this trend line right here, I was keeping it there just in case it would this would be the ending diagonal, yeah, for this overshoot, but it didn't do that, so it can pretty much disappear from here. I'm just gonna keep the rising channel, yeah. So moving on to the next view. So let me just go on the dollar index here on the 2-hour chart, and what I'm seeing is basically this pattern, yeah, being as a one complete pattern, this W specifically, right? Now, this in a case in which we would encounter a complex correction. So basically WX and then ABC, yeah, for this Y, in order to complete actually the um, intermediate B correction. However, this intermediate B correction, this is what I'm afraid of, that this running flat could be it, right? Not to mention that it could actually be a running flat as an A, B, C, D, E. Of course, we'll need to see this and then this, right? For this to actually be a triangle, so it can actually point way, way, way up, because intermediate A and B would be complete in this scenario, and then the C leg, the intermediate C, very powerful wave I would expect, yeah. However, for now, I am not looking at it like that, and the reason behind that is because of this how it actually unfolded. Yeah, if this was a 1 and this was a 2 and we would have an extension, yeah, so this would be the free fourth wave would come into the price action territory of wave 1, so this is pretty much invalidated. The only way it would fit is as an A, B, C. It would um, let's say fit in the triangle, right, for this A, B, C, D. So this would be a D wave, right? Now for this to be an E wave, right? For this, yeah, to start going up, still the E wave is not actually complete yet. So the key right now between patterns would be this small B wave. So for instance, the signs to look for and what I would be looking for obviously would be basically a corrective pattern here and five small waves on the upside in order for me to possibly complete this B wave, right? If it shows this, and then of course the normal thing is this wave, yeah, this is the key, yeah, this is basically the key of the entire structure, because if that wave would be extended, so we have an A and then the B and then the C, yeah, if this leg would go way lower than that and hit this fibs right here, not to mention that if it consolidates and bump its head in the trend line, yeah, it could have continuation. So I don't want to jump the gun here, but this pretty much looks interesting, right? And needs to be monitored. The dollar index, I mean. Now going on the, I'll say on gold, yeah, on let's say UUSD. Basically, let's say for instance on the dollar index, I had some views right there. Let's say, yeah, let's say for instance when it started this consolidation on the downside. Not to mention that I obviously followed up. So pretty much you guys can actually see that the 94.90 posed as the resistance and the 95.55, which were actually, let's say for instance, posted later on for this for this drop as well. And this is the 2-hour chart. So you could say that the moves were significant, right? So let me just continue with the gold charts now. Let's say somewhere around there, yeah, right there on the 1250 1240 levels, yeah, we can actually see that it actually successfully bounced from the 1240. Now the point is the way it bounced. It didn't bounce as an impulse, it bounced in a free waves structure, yeah, sequence. So we have ABC. Now this would put me in an A wave, yeah, or a correction for more downside. But the way this is unfolding, it's still correcting. So this leads me towards thinking that this could be an A, this could be a complex structure, and then the C leg to occur, after which, you know, if the dollar index would finalize that drop and the gold to actually rise, then this could have another pattern and gold could be very, very vulnerable further on. We'll see how extensive this C leg would be if the scenario is correct, of course. So short term and intraday, I'm seeing this as a double zigzag, so W, X, and then A. I would see this as a B, and then the C wave, and then an impulse with a 5-wave sequence to actually start right here in 1, 2, 3, 4, 5. Now, how high this would go? Obviously, this would be when the fibs will come in handy. Obviously, we'll see how much these things would actually occur, right? So it's either going to be 161.2 in order to complete the pattern, or it can even tag to stop. It can tag the 1304 pivot, but still vulnerable around 1280, I would say. So I'm not losing my hope yet in gold and silver. Yeah. Now next is silver, again on the 2-hour chart. Same thing with silver as well, bounced off from the 1585. I believe I did post this as well. Yeah, 16, 16 and 1585 were the levels, yeah, in focus. And now what's it doing is doing basically the same thing as gold, WX and then A, B, and then C leg. Now the key is this divergence right here on silver and also on the gold as well. So practically the same thing on silver, bounced off in the three legs, and now it's consolidating in a corrective structure. So again, same thing, double free, multiples, yeah, complex structure, because this structure is correcting this, and this is also a corrective structure. So there's a conflict of degrees, yeah, hence the explanation. I hope this solves it and not, yeah, anyway, moving on with crude oil right here, very nice drop on crude oil, yeah, around 73.74 was the posted um, points of interest, yeah, and it did start dropping from there. And further on, let's say July 5th, this arrow, basically because it broke out right there and it started dropping, and then of course continued, right? And on crude oil, what I would be expecting is I'm seeing this as a 1-2 extension in free. The free is not yet finalized in my personal opinion. I would expect this to continue right here, deliver the divergence, then a corrective feature to start for the fourth wave, and then 5 more waves on the downside, and we'll see how far this goes. Yeah, pretty much. So moving on with the euro. Euro has a very complicated structure, and I'm starting to think that it is indeed corrective. Just like the dollar index, it can fit as a triangle. It can also fit as a double free. However, I'm not losing my faith in it, and obviously this would be a mistake at this point, right? Of course. So let me see here. Views. Okay. Yeah. So back then on the euro, let's say for instance right here, I was actually expecting this bullish rise, and also followed it up, let's say, with another, I mean, the continuation of the C leg, yeah, for this small c. Now, what it did in the meantime is it still has chance for the upside. That's what I mean, right? In a sense that this could be W, X, and then Y in an A, then B in a triangle, and then the C wave, yeah. So this would be the W. This could be the X. So A, B, C. Again, just like the dollar index, the key would be the following structure. If this would be corrective, there would obviously be a continuation, possible continuation um, on the table. Now, a more of a pessimistic scenario would be a triangle scenario, yeah, in this type uh, of scenario, and then a continuation for the downside. However, for this triangle to be valid, right? Again, would still need to touch this trend line on the upside, right? So again, leaves me with this small wave as being the key towards this, because as far as I can tell, this could be a leading diagonal in an A, yeah, and this correction, if it's correcting like this, and if it shows a zigzag, it's even better, because a zigzag would be a nice continuation pattern to actually have. The way I'm labeling it for now is basic as a W, so this being a first structure, yeah, because the entire correction from the upside is complex as well. So it will only make sense for this correction, which is correcting a corrective, to also have corrective features complex to pose a complex corrective structure, yeah, such as a double or even a triple free, yeah. So It's not out of the question for this thing to have somewhat of a continuation towards 120 or slightly above. Pound dollar, moving on, yeah. Pound dollar, I'm labeling this as a leading diagonal in an A, complex corrective structure in the B, creating a new low, right? So it can either be a running flat or an expanded flat. Expanded flat will touch, or obviously would touch or exceed this high point, yeah, because this point in the B went lower than the point, the starting point of A. So in an expanded flat scenario, this would leave me with a 1, 2, and then 1, 2, 3. This wave count would be invalidated if this wave would go beyond the start of wave 1. So if we see a continuation right here, this would be invalidated and will only mean that this is the complete pattern. Yeah, an A, B, this is in fact the C, and this thing is continuing. However, I don't trust this one because this has a triangle in it. A triangle never forms in a wave 2. This is one giveaway. Yeah. Um, and also, unless it's, let's say, for instance, some sort of an ending diagonal, but I wouldn't be having a triangle at the start of an ending diagonal, but it doesn't matter. Anyhow, the point is that it's still looking corrective. Actually, it's a complex structure, so this bounce is not out of the question. Yeah. So again, the invalidation point would be if this wave 2 will go beyond the start of wave 1, yeah, and this would be invalidated. Until it doesn't do that, this upside, in my personal opinion, is still on the table as a possibility. Next, USD yen. Very interesting what's happening with the yen, right? Because it keeps on going up. Now, what I've noticed is that when the VIX spikes, then the yen gains strength as well, right? And I'm gonna show you some some other setups on pound yen and euro yen. Yeah, right now I'm on the US dollar Japanese yen on a 4-hour chart, and the way I'm seeing this is as a corrective piece. Yeah, no problem if it went higher than the starting point. A B wave can do that, right? So the way I'm labeling it is as in an A and then a complex structure, because remember, this is also a corrective piece, a start of a correction. Yeah, it's an A wave. And also this is correcting that move, and this big one is correcting this. So it's only normal to have complex structure. So the way I'm labeling this B wave, this red minor B, is in a W, X, and then an A, B in a triangle, and an extension, and we can actually see diverging. Yeah, so it could show a bearish divergence right here after a new high point would be created. Yeah, and the way to measure this is basically by measuring now wave 3 with wave 4 correction. Now the default measurements for a wave 4 correction would be the 38.2. It didn't even hit that, right? It hit the 23.6. But it can actually deliver that as well. Okay, so it can actually go higher a little bit, but we'll monitor it and I will be able to see it. But at least you guys know what I mean, right? So would be expecting a bearish divergence, not like this, but also like this, yeah? So let's say this would be the first divergence, and the secondary divergence, which would be the key, if you guys know how to spot these things, would be this type of divergence right here, okay? And the main divergence would be from 3 to 5. So that's for USD yen, and the way on the upside could be limited, yeah? Let me just do this. Okay, let me do. Okay, all right. So in a sense that, let's say, if this could be, let's say for instance, this could be either a a running flat or an expanded flat. A running flat, of course, would be looking something like this, and for me to see that is by using this Fibonacci extensions. Yeah. So a running flat would typically end around the 100%. An expanded flat will typically end around the 161.8. So we will see, basically, let's say for instance, if it starts dropping, yeah, a break of the 61.8, obviously, this would be, in my personal opinion, a point of interest. Yeah, I mean the previous tops and bottoms. We can actually spot them. And a drop would mean, of course, possible breach of this trend line. Now, the key is this next move. If it would be corrective, there could be a an expanded flat in the on the menu, right? If this starts in an impulsive manner and then does this, then obviously the running flat scenario is the one, and the B wave is actually complete. So it's going to be here. But it can be an expanded flat as well. So if an extension in this C wave would occur, the 161.8 would be in focus. Until then, we'll just be patient and look for possible signs of topping out right here on dollar yen. USD Swiss. The way I'm labeling the USD Swiss is a big fall right there, which was posted, of course, right, for you guys. So let's say, for instance, here on the downside, yeah, and also previously somewhere around there. Yep, this one with this levels in focus in my view right there. Yeah, and it started basically unfolding right there in this downtrend. Now, the way I'm labeling it is in a complex WXY structure. So we had the W right here, the minor purple W, and then started correcting on the upside now. And because this correction is correcting a previous correction, it's developing a complex structure as well. So we have a WXY, you see, again the same thing, big correction, WXY. So we have a complex structure, a double free, which is correcting a previous complex correction, right? So it's a conflict of correction. So the overall structure is this. Yeah. So I would consider the X wave to be complete. Hence the reason why I think that dollar index, back on the dollar index, could actually deliver that drop, because USD Swiss has um, has basically this wave still um, remaining to unfold. Yeah, because this is correction, so it's only normal for the correction to be complete. You see? I'm glad you do. Moving on. Aussie dollar. Aussie dollar can do two things right here. This is typically correction. Yeah. So it can either break and complete this correction somewhere around here, B. We'll see if the C leg. You see, everything points out towards a weakness in the dollar index, yeah, of the dollar itself in the C leg, yeah, in an impulsive manner. So a Aussie dollar in the 2-hour chart shows that somewhere around here, yeah, if it will be this, because this Y can actually be here as well, you see, yeah, and breach could occur for that, and then the C leg, yeah, so we'll basically see it unfolding. Now the way I'm labeling it is, of course, is an A, a B, and then expecting a C for the entire pattern as well. Yeah, of course, more downside for this. So yeah, this was also posted. Let's say this rise, because at that stage the pattern was looking like it finalized and Aussie dollar would go bullish and tag the top. but it's not showing those type of those signs. Yeah, so that's it. Now Kiwi, the New Zealand dollar. Yeah, same thing. A, B, and then this pretty much looks better, I would say. However, I'm not sure this should actually be a W. This could be an X, and then we'll see if this is the Y for this entire pattern. Yeah, but still, this leg on the upside, until this leg on the upside would not occur, the pattern cannot really be considered as complete unless it forms a triangle. Yeah, so these are the signs to look for, either a fourth wave or a B wave. Yeah, we'll see, but the structures are pointing up towards some things. Now to leave you guys with something, I'm looking at the pound yen, and I told you guys previously that earlier that the yen is showing signs of possible strength. I mean, to possibly strengthen. So I'm seeing that against the GBP JPY. I'm seeing that against the I mean the yen against the pound and against the euro. So let me just explain to you here what I have now. Since it topped out and it broke the channel right here, yeah, the pound yen. This is a daily chart, yeah. So we have a free wave on the downside, which I'm marking it as a W in a complex structure, and this I'm marking it as this entire rise. I'm marking it as an X wave in a minor degree. Yeah. Now, also, you guys can actually see this this harmonic ABCD, this bat, bearish bat. So we have X, A, B, C, D, and pretty much, let me just get rid of this for now, make the chart clearer. Yeah, we have a candlestick formations right there at the trend line. Yeah, we just need a divergence right here to possibly complete. So if it even goes there to give the divergence and meet the 61.8 of this fall, because this is still looking corrective. Yeah. So this box is indeed the in focus, yeah. So as you can see, it has hit my 149 levels, which is basically the 100% from A to B to determine the possible C, yeah. So it could actually start as well. So it doesn't really have to go because it meets the rules. This B did not go lower than the start of A, and this C went higher than the start of A. So we do have an ABCD. Yeah, no, sorry, ABC. Now again, you can actually do this as well. Yeah, AB equals CD with this type of pattern as well right here. So there are multiple signs of pound yen, basically this being the correction after the breach. Yeah, so it could actually, in other ways, in my personal opinion, it could bump its head and actually continue. Short and simple. Now moving on to Euro JPY, same pattern right here. Okay, after it created a complex structure right here. Yeah, which I'm marking as a W. Again, started correcting on the upside, and the same bearish path can be seen on Euro JPY on the 4-hour chart. Yeah, so this can be X, A, B, C, D. Let me just get rid of this so you can actually see it better. The way I'm labeling this A, B, C is in an ending diagonal. So we have 1, 2, 3, 4, and then this 100% is in focus. I'm gonna explain to you why, because this 100% would represent the Fibonacci extensions of A and B to determine the C, right? So 100% is it actually in focus. We have the bearish divergence, yeah, even on the GBP JPY on the daily we don't have it, but on the 4-hour chart on the euro JPY we do have it. So let's say for instance we do have the bearish divergence. Now obviously levels in focus would be 100% Fibonacci extensions of A and B intermediate blue, but also the 61.8, yeah, I mean this 61.8 is this Fibonacci retracement. I mean this one. This 61.8, this 78.6 is the default measurement for the harmonic in that type of scenario. Now what it can do is it can breach it, and the signs to look for would be a bear flag right here, a correction, typical correction right there for a continuation on the downside. So this is pretty much, I mean, pound yen and euro yen are possibly agreeing with starting a drop. Now the next on the menu is euro GBP, and this is a very complex structure. I'm not going to go into all this, right? What I'm going to do is just go here, and we can see the corrective pattern, and it seems to me like this move is going to go, is possibly going to go towards the 100% of these two moves. Just clear the charts, yeah. So this is one pattern, this is one leg, this is the second leg. This could be the final leg, hitting the 78.6, hit it already, right? But it seems to me like it could want the 100% in order for this pattern to complete. Okay? So in other words, Euro GBP could start a big downtrend. We'll see if that happens. An interesting thing is also the USD CAD, and let's say back then, this is a daily chart on the USD CAD. Let's say for instance, I knew I was present right here back in April 2017, more than a year ago. Yeah, with this structure in view, basically possibly starting a drop from 1.38, and it did. Yeah, you guys can actually see it, but a rise from 1.338 towards 1.38. So we did have this, yeah. So this rise and then the fall. So in the meantime, it did a very complex thing, right? I mean, also when the breach actually occurred, it was actually present right there for this breach. Again, this is a daily chart, so this is a huge move, right? And this is when I waited for the pattern to reveal. So it did, yeah. Let's say, for instance, an ABCD right there, and posted a possible bearish outcome in March 15, and you guys can actually see it in the Orbex blog, yeah, at 1.31. And exactly at 1.31 started dropping because it was the 100%. Now, what's it doing right here, in my personal opinion, is developing a complex structure as well. Because, you know why? I just explained it earlier. This is correction. This is one main move. This is correction. So this correction is correcting this. Okay? So, the way I'm seeing this, and I'm measuring it with the fibs right here from A to B towards C. So how I'm seeing this is as an ending diagonal, yeah, and this can do two things. It can either move up and deliver that proper divergence right here, and then bearish volumes, of course. So we could have the bearish divergence, also hit the trend line. Notice from where this trend line comes from, right? Because this is a downtrend channel of a larger degree. So it can actually do that. Now it can either go up, deliver the divergence, or it can breach, and the signs to look for would be a bearish correction right there. Yeah, basically a bearish continuation pattern. So back to the VIX. Yeah, we can actually see that the the fear sentiment could be kicking in, and what I'm actually curious to see is how these markets would unfold. Now, Of course, you guys can actually follow me during the webinars that I'm hosting live, or even if you do want to learn, there's an Elliott Wave ebook released, so make sure that you ask for it if you want to, if you don't have access to it, obviously. Yeah, just a small announcement right here. The full Elliott Wave video course will take place, and also will be followed up with constant, frequent sessions, yeah, either educational or straight to the point analysis, and obviously to follow up and to answer questions, and also to look at the markets and spot possible opportunities, yeah, for live account holders, obviously. So there's many things coming, right? So just stick around, and yeah, I hope you liked this video and the analysis so far. This has just a few views, and I'm obviously going to update them as they unfold. So yeah, but until then, as I like to say to all my traders, stay in the green and many pips ahead.